Assalamualaikum and salam sejahtera. Welcome to FAR110 lecture series number 10, where this video is to discuss on the financial statement. There are two statements that we will discuss in FAR110. These two statements is first statement of profit or loss, and the second one later we will discuss on the statement of financial positions. Statement of profit or loss, the old term is income statements, and the older versions is statement of comprehensive income. Some of the companies still use the old term, but this is the current term used. This is statement of profit or loss. The name of the statement is clear. It's actually to find whether the company making a gross profit or the gross loss. This is the first part of statement of profit or loss. The next part is to explain whether the company making net profit or net loss. So the gross profit or gross loss, in order for us to identify this, you need to calculate certain items that is related to purchases, sales, and inventory. So this is some more, we say that whether the business is making profit or loss in terms of trading, the transactions of trading the inventory. So we need to calculate. The first formula that we need to have to remember or to calculate is the net sales deduct with cost of sales equals to the gross profit. Then you need to calculate the cost of sales. However, if you use perpetual inventory system, we do not need to calculate cost of sales at the end of the year, because our system or our records already calculated cost of sales each time we sell off the goods. It's already calculated. And then you need to identify with the amount of net sales that is sales deduct return inwards, or other name is sales return. And then you need to calculate the cost of available for sale, which is the net purchases at carriage inwards or any other expenses related to purchases. And then you need to understand that net purchases comes from purchases deduct with return outwards or purchases return. And then all of those formula will come to the amount of gross profit. We will look later in the format form, which is more understandable. And the second part of statement of profit or loss is to show how the company making the net profit or loss, which is the gross profit or gross loss will add into with other income and deduct with other expenses. For FAR110 is actually does not require you to differentiate the expenses. Other expenses means that we do not need to classify the expenses yet. However, I would encourage you to classify the expenses into the selling and distributions, general administration, and also financial, because for FAR160 for the next semester, you need to identify, you need to classify these expenses when you preparing the published company account. So better you have an exercise or familiar yourself with expenses classifications First, selling and distributions is actually relating to the sales and distributing goods to the customer. For example, the cash outwards of advertising. Um, and the second one is general administrations. We can put administrations only that's acceptable. Any expenses that to run the office or the management. For example, salaries of the managers, salaries of clerical or accounts, and then a rental of office, rental of the management offices, and the bills that related to administrative premises. And the third expenses is financial, where any expenses that relating to debt collecting activities or payment or financing. For example, the discount allowed or interest payable. But normally discount allowed will not be there because we already put in calculating the gross profit. Okay, first we look into the statement of profit or loss format. The first formula just now, I told you, the formula that you need to memorize, to put into your mind and keep it there, because you will again and again need to prepare the statement of profit or loss for each semester of your courses. And also you need to have this memory in order for you to work later. So net sales deduct with cost of sales, you will have the amount of gross profit. This is new, especially those who have not have a basic knowledge of accounting, have not learned accounting courses during their CJ Pelajaran Malaysia SPM last year. So you need to memorize this. Okay, net sales deduct with cost of sales, you will have the amount of gross profit. And the net sales is actually arrived the amount of net sales when you have the total sales. Sales can be in terms of cash and also in terms of credit. So the sales on credit and sales on cash. So you have a total of sales and you need to deduct the sales return, or other name return inwards, and deduct with discount allowed, or some of the books use sales discount. So sales deduct sales return and deduct the discount allowed, you will have the amount of net sales. And cost of sales is calculated by the items of opening inventory, that is the first item that you need to find, and add with net purchases less closing inventory. And also do not forget to add the expenses related to purchases, or the expenses that will increase the cost of the purchases. Okay, this is the 4 items that you need to ingrain in your brain. Opening inventory, add net purchases, add expenses related to purchases, and less the closing inventory, then you will have the amount of cost of sales. And net purchases is actually comes from the formula of purchases less purchases returned and less the discount received. So this is the amount that will form the net purchases amount. I repeat, the purchases, total purchases. Purchases can be in terms of cash purchases and purchases on credit. So you have all the total of purchases from the purchases account. Then you less purchases returns, or other name is called return outwards, and less discount received, or some books use purchases discount. And the expenses related to purchases, just I said just now, cost that will increase the cost of purchases. The example is carriage inwards, or tax on purchased goods, or insurance that specifically on the goods purchased. For example, the value of your item is very high, like gold or jewelry, that probably the amount is millions or thousands, hundred thousands. So when we purchase that goods, usually you have to pay the insurance on the goods purchased to protect to protect the liability during the transportations of that particular goods. So when you pay that insurance of good purchase, so those are the costs will increase the cost of your goods. So it will be put here, the expenses related to purchase, in order for you to calculate the cost of sales. Another example is import duty, because you need to pay the import duty on at the border of the country, because if you do not pay the import duty, the 20% of the value from the value of your goods imported, if you do not pay that imported duty, that you will not get that goods. So it will increase the cost of your goods. So that's why it will be put in the added expenses related to purchases, in order for you to calculate the cost of sales. So recap. So your sales deduct return inwards, less discount allowed. You have net sales. Then you have the cost of sales, where the opening inventory. Then you have net purchases, which comes from purchases less return hours, less discount received. And you will add the expenses related to purchases and less closing inventories. So at the end of the first part of statement of profit or loss for the year ended, and then okay, the date will be depends on your closing date of your accounting year. So if 30th June, then you put 30th June. Otherwise, you can put the 31st December, your accounting year end. And do not forget to put the name of the company. So this is the first part, format for statement of profit or loss. So the second part of statement of profit or loss, you already have the amount of gross profit. So the second part is the gross profit amount that you identified or you calculated, and you add with other revenues. So the other revenues is not trading purposes. I mean, not relating to the trading your trading goods, I mean the sales and purchases. Other revenue can in terms of your commissions, or rental received, or dividend, and so on. So these are other revenues other than the core business of your business. And last, with other expenses, because purchases is expenses, but we already calculated at the first part of this statement of profit or loss just now. So other expenses is other than the expenses that we already put in the first part of this statement of profit or loss. So less other expenses, for example, the salaries or the electricity bills and so on. And when you add other revenue less other expenses from your gross profit, you will have the amount of net profit. So it concludes the statement of profit or loss, where you already identify the net profit or loss. Depends. You need to put whether if your expense is more than the revenue, then you have the gross loss. But if your revenue more than expenses, then you will have the profit. So you cannot put gross profit slash loss. No, your statement, if you prepare the statement of profit or loss, you need to specify whether the business or the data that you have, whether the business is making profit or making loss. You must specify, not slash. Do not put the slash. If you put the slash, means that you are not sure. So you need to identify, okay, if the expenses is more than the revenue, then you will identify it as gross loss or net loss. Okay. So we comes to the statement of financial positions. Many companies or many books are still using balance sheets term. So that is the older term. So you can use balance sheet if your accounting software using balance sheet, so you cannot change it. But this is the current term. Please use this current term. So again, if you prepare this financial statement, you need to have the name of the company first, then the name of the statement. This is the statement of financial positions, and the date, the accounting year end. What is the accounting year end? Depends. Okay, the statement of financial positions is actually listing out the asset must be equals to liability at owner's equity. We are showing the accounting equations in the statement of financial positions. Okay, so then you need to list out what are the business non-current assets and what are the business current assets. Total them up, so you have the total amount of assets, and you need to show the reader how they finance the asset, whether you are finance the asset using the owner's equity or the non-current liability or current liability. So this is the list that you need to ingrain in your brain. This is what will be displayed in the statement of financial positions. Remember when we learned the accounting classifications, where you has been explained the non-current asset can be in terms of tangible assets, and intangible assets, there is an investment, and you have the biological asset. But the tangible asset have a influence by depreciating in value. For example, the vehicles, the second year or the third year you own that vehicles, the amount or the value of the vehicle, of course, will be less than when you purchase that vehicle. So the tangible asset is subject to depreciating of value. So you need to show in your non-current asset listing what are the tangible assets that subject to depreciating value. So you need to show what is the cost that you purchase that tangible asset, the furniture, the buildings, or the office equipment. What are the costs that you pay when you purchase that particular tangible assets, and what are the accumulated depreciations, what are the amount that you assume has depreciated the value. And once you deduct the amount of the cost of those tangible assets, deduct with the accumulated depreciations, then you will arrive at the carrying amount or the carrying value of that tangible asset. The carrying value of tangible asset is more or less on the market based of market value of the tangible asset. Not necessarily that accurate, but more or less the amount of market value. For example, the second year of your office equipment has been depreciated 2,000 ringgit, and the cost that you pay for that office equipment is 10,000. So 10,000 deduct with 2,000, then you will have the carrying amount or the carrying value of your office equipment is 8,000 ringgit. So that is the amount that you need to show in the statement of financial positions. That is the amount is currently at the date of 30th June 2020. That is the carrying value of office equipment. So you need to display that amount in your statement of financial positions. And the owner's equity is listing out the capital add with net profit. Remember, we already identified the net profit from the statement of profit or loss. So that amount will be transferred here. The capital add net profit, and also deduct drawings if there is drawings. So those are the items to calculate the owner's equity amount. So once you complete the statement of financial positions, you need to calculate the total of assets must be equal to total of equity at the total and the total of liability. Those must be equal. Otherwise, you wrongly calculated or wrongly prepare the statement of financial positions. In other words, non-current asset add current asset, then you have the total asset. Owner's equity add non-current liability add with current liability, that is the total equity and liability. So this must be equal. That's all for now for this video. Thank you for watching. Watch out for the next video for the next topic. Bye bye.